We would now begin with our next panel discussion on real estate industry. Current real estate financing trends and the significance of real estate in investment portfolio of HNI and ultra HNI and legal documentation of property transactions. We have on the panel with us Mr. Ajay Sharma, Head, Consulting and Valuation Services, HDFC Realty Limited. Mr. Arvind Nandan, Real Estate Expert. Mr. Neeraj Pruthi, Senior Vice President, Realty, iFin Service Private Limited. Mr. Paresh Karia, Director, Easy to Own Estate. Mr. Vivek Sharma, Vice President, Sales, Ahuja Constructions. I would reiterate the format of the panel discussion would be each panelist speaker would speak on the panel topic for 5 minutes each, followed by the open forum amongst the panelists, followed by the question-answer session amongst the audience. Thank you. Mr. Arvind Nandan would be the moderator in the real estate panel.
Thank you very much for that. Is it audible? Well, real estate is such a subject, whether you treat it as an asset class, whether you treat it as an investment arena, that it's practically almost impossible to comprehend all parts of it or all aspects of it. But still, there are patterns, between all the myriad patterns and the spectrum of different choices. There is definitely a pattern, and I believe through this discussion, we can somehow decipher some of those, if not all, going forward in the next half an hour, 45 minutes, or whatever it takes. Before I get into this, I am reminded of a very favorite shairi of mine, so people who understand Hindi or Urdu will probably comprehend it and will try and translate it for the others. It says, it goes like this. निकल जाए दम गम इतना भी नहीं, निकल जाए दम गम इतना भी नहीं, वक्त मुश्किल है तो क्या बेरहम भी नहीं. What it means is, the times might be difficult. It appears that the times are difficult. It appears that they'll practically kill us, they'll completely demolish us. But it's important to realize that times are difficult, but they're usually not heartless, they're usually not ruthless. One has to be able to understand the times. I think it always applies to the cycle that we are in the real estate sector. We always feel real estate is a difficult asset class. It's practically impossible to comprehend it. But like I was saying earlier, with a little bit of application of mind, with a little bit of application of thought, there are certain patterns and certain intelligent decisions that can definitely be taken out. So let me start without much ado further. Let me start taking our panelists on board and taking their views. Ajay, maybe let me start with you. First of all, as an asset class, as a motherhood statement, let me say, as an asset class, how would you define real estate, and how would you actually say that there are things which can be understood at the macro level at least?
Thanks, Nandan. Just to go into the definition of real estate, there's a lot of confusion many times, what is an estate and what is a real estate, and so on and so forth. So anything practically that is immovable, and grounded is real estate. It's as simple as that. And there are various aspects to this, as we all know, and of course the forum which is gathered here, most of them know, there's a yield generating real estate, there's a high value real estate, and so on and so forth. Coming to why it's a difficult asset class, as you started talking, is because of the various regulatory frameworks that are there, and which differ from state to state, region to region. Also, the perspective of taxations on these asset classes, and more importantly is the markets themselves and the behavior of the buyers in these markets. I'm quite sure, all the wealth managers, when they're speaking to their clients, and when the clients want to invest into various regions, a lot of them will come and tell, we don't understand that market at all. For example, anyone investing into Bombay for sure knows that Delhi NCR is a googly for them, completely. So, the complexity arises because of the kind of differences that the market itself behaves in. So that's one of the key aspects, and and that's where I think the role of wealth managers is very important, especially for high net worth individuals, and even in fact going forward, I'd say even the developers are taking a lot of interest in educating their own consumers about why a certain market behaves. For example, even in residential real estate, I'm quite sure my fellow panelists will agree, is that within the same market, you can have completely two different price points. And for a consumer, it's like, why is it so different? I'm staying in the same location, but why is it so different? So I think a lot of education of the consumer has to happen, depending on what the product is, especially consumer. That's more important. So a lot of developers go through, and in fact, in my interaction with developers as an advisory person, they come back and tell me one of the key questions in the marketing dockets. They go through the specifications and say that, no, all the projects have the same specifications, so why the price difference? Why should I get into this? So these kind of questions a lot of people ask. I'm quite sure a lot of your own clients keep asking, and we need to keep educating them about this. So it's a long-run process, and we need to just get there slowly.
Absolutely true. But I think what you said brings to the fore some very important aspects. Like it's an asset class that's not easily understood. Things are even more complicated because sometimes what applies in one place doesn't apply in another place. What applies in two places at the same time doesn't apply in those two places at another time. So things change with time, things change with place. One of the critical aspects of real estate is that it is built on one fixed component, and that's land. Like other assets, whether they are automobiles or any other possessions or assets that you have, real estate is entirely dependent, or to a great extent dependent on land. To understand real estate, I believe understanding the behavior of land and the way the asset class moves, its values change with land is important. Let me bring in Paresh here. Paresh, how do you sort of break real estate into easily understandable sub-asset classes?
Yeah. So I would just like to take it forward from there. Yeah. So I would just like to take it forward from what Ajay and Arvind has said. There is a lot of confusion with regard to real estate, and confusion is with the customers themselves, with the people who are investing in real estate. So to understand it better, let's break it down into various components. First of all, we need to understand why a person is buying real estate. Is it buying it for his own use, or is it buying it from investment? When you are buying for your end use, the way to look at real estate is different. When you are looking at it from an investment point of view, the way to look at it is different. And this is where the confusion comes in. We have seen customers typically, even when they are buying a property for investment, they will evaluate it as if they are going to buy it, go and stay it over there. Now, that is not the case. So this is where we need to, wealth managers or advisors need to come in and help the customers in understanding, helping the customers to realize what exactly do they need. Then again, when we look at it from an investment point of view, we need to realize that why is one investing in real estate? Is it one investing for regular return, or is it one investing for capital appreciation? Now, if one is looking for a regular return, then a commercial property which gives lease rentals makes more sense. But we have come across customers who wants to buy residential property for rental income, which will give a return of just 2 or 3%. So typically a residential property one should invest if one is looking for capital appreciation. Another confusion which is there in a customer's mind is whether he should buy a property which is just launched, which is just getting, off the pad, or should one buy a property which is ready to move in. Now, typically, a ready-to-move-in property is suitable for someone who is looking at end use. A property which is just getting launched is the one which will give you a return because there is an execution risk involved in it. And if a customer is ready to take an execution risk, he will get a higher return. So we have come across investors who still come and ask us for ready-to-move-in property as an investment option. So this is where, we have, people like us have a role to play. We need to advise, we need to sit back with the customers, we need to educate them, ask them questions, and find out what help the customers in realizing what actually they need, and accordingly advise the customers.
Very true. Actually, where you the term which is probably a little cliched by now, because everybody says location, location. You've tried to decode it for us, actually saying, look at the infrastructure potential, look at what's happening in future. Paresh, there is something related to that, and I believe it's absolutely critical, because I believe in the dictum that a good foresight doesn't come without a good hindsight, right? I mean, you can do all calculations on an Excel sheet or on paper, but if you haven't had the wisdom of looking back at what's happened in the past, if you don't have the knowledge of history, your calculations and Excel sheets can still go very horribly wrong. If I were to take you back a little, and particularly, from the point of view of decoding concepts in real estate, so that they can be applied with wisdom to the future value assessment or the future understanding of real estate valuation, what trends have you found of significance, particularly things which could impart a bit of learning for, let's say, a value assessor in real estate, or somebody who wants to understand the trends that as they may occur in the future? Are there certain specific takeaways that you have? Just to add one more rider, we are currently living in a world where things are becoming a little more puzzling. We've heard that Europe is going through a deflationary economy now. And we've heard that the European Commercial Bank is actually now making the interest rates negative, which is, a tricky and interesting phenomenon. Are there lessons in the past which tell us how to put the economic factors together, how to put the real estate cycles together, and draw some conclusions from there? All yours.
Exactly. Now, it is very important. You cannot, if you want to know what the future, you need to go and delve into the past. And there are lots of examples of how, things have unfolded in the past, how they have benefited the real estate industry, and the same things are likely to happen into the future. The best example I can give is that of BKC. We all know what was BKC 20 years back. It was just a marshy land. And today, probably it is one of the most expensive commercial real estate in the country. So we have seen how BKC has developed, how MMRDA took the initiative to plan and shift the central business district from South Mumbai to central Mumbai. And now we have seen what are the rates prevailing in BKC. There are a lot of residential development also taking place in and around BKC, and the rates in that region is, more than what you have in South Mumbai today. So similarly, using the same analogy, you can see how Wadala is developing. Same thing which happened to BKC is currently happening with Wadala. Again, it is being planned and developed by MMRDA. All the infrastructure and connectivity initiatives are converging at Wadala. If you see the Eastern Freeway, which is again developed by MMRDA, is passing through Wadala. The monorail is again going through Wadala. There is commercial, etc., going to come up. So you can see the same kind of development will take place, and you will see appreciation taking place in future. So you can apply all this, things and try to analyze what will happen in the future. Other thing I would like to say is when you are, trying to identify a location for investment, let's say when you are looking for real estate for investment, the methodology is very similar to when you are trying to identify a stock for investment in equity. You can have a top-down approach or a bottom-up approach. The factors are similar. You need to see what is the future. You need to see how things are going to unfold. You need to see how the connectivity, etc., is going to come into the place. And one of the factors, apart from location, which one should look at to identify emerging, investment opportunities, is the economic activity happening in the region and the employment opportunity. We have seen, like again, for example, in BKC, today, because there are so many office spaces in BKC, there are micro markets around BKC like, Kalina, Kurla, Ghatkopar, Chimbur, etc. are developing. Because once people move into these areas where there is employment opportunity, there is going to be demand for residences in and around those places. We have seen that happening with Hinjewadi in Pune. Hinjewadi is an IT park, and last 3-4 years, we have seen huge residential development taking place over there because there are hundreds and thousands of people working in the IT park, and there were no residential available. So these are some of the factors. Nowadays, economic activity, employment generation has become an important factor to identify emerging investment opportunities.
Hello. Basically, we are the advisors. We advise our clients to invest in share market or mutual funds or real estate or gold. So, investing in real estate is one of the options we have to invest in. In current situation, whether you feel that these prices of real estates are reasonable and we are going to get an appreciation in near future in real estate, I'm talking mainly about Bombay. And the second question is, do you expect like a subprime crisis in India?
Do you want any specific panelist to answer that for you?
Anybody can answer.
Okay. Anybody willing to take that? Okay. Paresh.
Yeah. As far as the view on the real estate prices in Mumbai is concerned, well, it will depend upon, currently we are seeing there is a situation of oversupply in most of the Mumbai market. So the general view is that we are not expecting prices to go up substantially in the immediate future. Now, having said that, yes, there could be some pockets which you can identify. Like I said, now investing in real estate is very similar to investing in stock market. We may not be in a bull run, but we can identify specific opportunities, specific locations. So what appears is that the eastern side of the city, the western side part of the city is already developed. I'm talking about the suburbs. The eastern part of the city, areas like Chimbur, Vadala, where there is a lot of development taking place, there is a lot of connectivity initiatives being taken place, are underway. So we feel that, the eastern part will develop more than western part, and you could still identify some good investment opportunities in that location. As far as the western suburbs are concerned, there is a huge oversupply situation, so we don't see much appreciation taking place over there. Same is the case with, south and central Mumbai, where we are talking about Worli, Prabhadevi, Parel. There is a lot of oversupply situation, so we may not see much appreciation over there. We will see appreciation taking place in the outskirts of Mumbai, in the MMR region, typically places beyond, let's say, Virar. Things like Palghar, which may fall in the path of the Delhi-Mumbai industrial corridor. So maybe those are the locations where we'll see good price appreciation. Places like Badlapur, Ambernath, etc., which are good affordable housing destinations. So these are some of the areas in which we can see good price appreciation.
Just adding to what Paresh was saying,
probably
I think
we need to just close.
A lot of questions, so maybe he can be one of the person to present the memento. Yeah, so can I please request? Yeah. But the rest of the questions has to be put by you, sir. So your turn.
We are all wealth managers over here, and we all talk about allocation to real estate. Allocate portfolio allocation. So I would like to ask you, what you think is the right location to real estate? What should be the right location to real estate in an investor's portfolio?
Yes, please, Mike, please.
I believe it should be around 2% because liquidity is an efficient risk because of liquidity. And maybe if you are planning something about, if you are planning and let's say it's a goal-oriented thing, and at the time, let's say after 15 years, somebody needs money. And after 15 years, let's say there is a problem in like 2008, there is a huge liquidity problem. And if it is invested in other asset class, it is better to have it in that's why I would allocate around 15%.
So, Yasir? Please come.
As for, well, see, 15% may be excluding your primary property. You know, we are talking about excluding your primary from an investment of view, 50%, 20%. But typically in India, it has been 35% and upwards. So that needs to be corrected.